All right, good afternoon, everyone. This is Joe Henches with Beyond the Chart, and today is Saturday, March 15th, 2014, and this is the weekend edition of Technical Analysis of the Stock Market today. And today we're going to take a look at the Dow and the S&P and NASDAQ. We're going to concentrate on the Dow on a weekly basis also, and then look at some of the indicators, and then look at Apple and BIDU, which we typically do every Saturday. I may add another one in as time goes on. We'll just have to see. In a couple of these high ATR stocks that I call them, anything that's over 4.0 on an ATR, to me, I've got classified as a high ATR stock, because that's a lot of, it's a pretty good range that you got in that stock. And if you got to have a stop loss on that, it starts to get pretty big. So anyway, all right, so we had the Dow down 43 points on Friday. We're continuing the sell-off in here. We'll have to see. Nothing clear in terms of resistance. Maybe right in here we got a little bounce before off of 16,000. We might get that. Let's take a look on a weekly basis, and then we're going to come back, spend a little time on this. Or actually, I may just do it right now. On a weekly basis here, you can see the close was below the last 2 weeks, the low of the last 2 weeks. So pretty solid sell-off for the entire week. And we'll just have to see. I mean, it's down below the 10-week moving average in here. And the first time it's closed below that since February 7th, so it's a little over a month. And I'm still going to call this is the high up in here at the week of January 3rd, March 31st, the high on the Dow. I'm still saying that's the peak until it turns around and takes out that peak. So at this point, this is potentially it. And we're, the way I'm looking at this is, this is a complex zigzag corrective move. Even though we're calling it a bull market, when you look at a lot of different things, you look at the volume on this entire rally since 2009, it's totally declining. I mean, so we've got higher prices being supported by less and less volume the entire time. That is not a strong bull market type move. We're now starting to get divergences in here. And the other thing I want to think about here in terms of legs that we can have, and things that can happen, and how quickly something can turn over. And the other thing is, people say, well, we've gone to new highs, so are we at a bull market? I mean, because we took out this peak. Well, we took out the high here too, and then we turned over and rolled over pretty doggone fast, and in 18 months took out the low of 2002. And so here we've moved to a new high here. It would, this thing can roll over just as fast, and the timing right now, I think, is that we're getting very, very close to that. We need to be extremely aware. Now let's go back to some corrective action. We're going to take you back to the 70s, and back in here, let's look at this corrective action. This is pretty interesting when you start to look at it. You can see, well, wow, what did they have going on back here? Especially when you blow it up a little bit. So here was the peak of February 11th, 1966. That was the peak of a huge move from 1942. Okay, that was a wave 3, and then this corrective wave was like a sideways triangle in here. Okay, and look, well, here you went to a new high, just like we're kind of doing right now, and then it rolled over, and between here, January 12th, 73, in December 74, it literally cut it in half, very, very quickly, in a corrective mode. So, yes, it can happen. And yes, just because you've gone to new highs does not mean that you're necessarily in a new bull market by any means. So you have to take the entire move into consideration. And if you look at this on an entire basis, here's 1929 peak. Here's, the way we're counting this is wave 1, wave 2, 1942, bottomed, wave 3, 1966, wave 4, 1974, bottom. And we've had this huge bull wave 5 up in here to the year 2000. And then we're in this corrective sideways action, very similar to the 70s, the late 60s and 70s, very similar. Okay. And so now you move up to this new high up in here, and now we need to be on red alert for rolling over. And now we've got the Dow starting to sell off. We'll see. Now, if it takes out this high, then we got to kind of reevaluate what is going on here. But right now, it's not. If we go to the S&P 500, okay, I'm saying that this is the fifth wave now, that it's completed, and now this is starting its first move down. So it looks like the Dow's ahead of it on a downside move. And again, we're going to need to keep watch. I mean, that's the best scenario that I could lay out at this point in time. And when I look for resistance on the S&P, I think it's in here, 1834. I mean, support. I'm sorry, this support. Potential support to come in, 1834 and 1824. Okay, I need to move kind of quickly or I'm going to run out of time. The NASDAQ, similar, kind of rolled over. You're starting to get the 10-day breaking below the 21-day. Coming off the upper end of that channel. We talked about the VIX has made a big move, pretty strong, the longest, highest close in well over a month. Pretty strong pop, kind of going along with the sell-off. And I'm going to come back to high-low. The high-low, again, the 10 has crossed the 21, so we're starting to trend down with the high-low, the net high-low in here, similar to what we've talked about prior on this indicator. And then the short-term trading index, we're up looking very similar. We're at this level where we were on January 24th. And I happen to go back and check. When you look at this on January 24th, it's kind of interesting on the Dow Industrials. Here's January 24th, okay? Well, look at this pattern of this big move down this sideways. Big move down this little, like a doji almost. It's not a doji, but it's that kind of little spinning top kind of thing. So we've got that combo. So we could easily get a little bit of a pullback, side down, pullback. We'll have to see. I mean, nothing never duplicates exactly, but it's an interesting to get a 2-day pattern is looking very similar to 2-day pattern here, and we're at the same level on the short-term trading index. Okay, I think that's about it on the indicators. Let's take a look at Apple real quick. Apple has broken this trend line to the downside, and the 10-day is below the 21-day. It looks like it's starting to roll over. I'd like to see it break this point here to confirm that it's doing it. Again, we're continuing to look for lower highs and lower lows, and so far it seems to be starting to give that to us again. BIDU, remember I talked about, I thought maybe this was the B move up in here. We'll have an A, B, C. So we're really looking at this to do this, and this was the B, and then this is the C. And I mean, we've got this gap here, got this gap here, and we'll just have to see. There's no guarantee. It could just chop sideways, and do that. But right now, it's broken this trend line, and it's had a heck of a move. And when you look at this, let me get out of this. Let me go back to this. When you look at this on a weekly basis, I'll quickly flip to it. It doesn't erase the other markers kind of thing, but you can see the big down move that it did over the last week. So anyway, that's it on Apple, BIDU, and all of that. I'll be back tomorrow with trade ideas, and I have I've sent this out to my subscribers. Have password protected the Trade Ideas webpage, so if you want access to that, details of the Trade Ideas, would love to have you do it. All you got to do is sign up to get email updates. Just your first name and email address. Pretty simple. I don't share that with anybody else. It stays with me. And let's see. Seems like there was something else. Oh, yeah. One thing I just want to mention is, to me, when we look at the charts and things like that, to me the truth is in the charts. And so I love this little scenario from the movie.
You want answers? I think I'm entitled. You want answers? I want the truth. You can't handle the truth.
You want the truth. The truth is in the charts. But trading is beyond the chart. And trading is in you. So the whole key of this whole thing is, can we handle the truth? And it's all about handling greed and fear. And handling the truth is in the charts, but it's beyond the chart. It's in all of us. So anyway, that's it. Trading psychology for today. Have a great weekend. We'll talk to you tomorrow. This has been Joe for Beyond the Chart.